Thank you for joining me for another daily edition of what I call Crypto for the Rest of Us, where I bring one tip, one tool, or one coin analysis. I try to keep it short, sweet, and dive into one specific thing every day to help you on your journey as I do my own with crypto investing, because I believe it's going to be here for the long term. Now, if you appreciate what I do, please hit the like button and subscribe so you don't miss any of these future updates. Today, we're going to talk about some metrics, and we'll find them on the DeFi Lama platform. We talked about this yesterday. We talked about the total value locked and the market cap. Today, we're going to talk about fees and revenue. Crazy, right? As someone who's as old as me and been involved in a lot of different startup companies, I know that if you go into a meeting with developers, programmers, they're going to come up with amazing, incredible features. And then you go into a meeting with those that have to worry about revenue, and they're worried about, do people want these things? Are they going to use these things? Whether you've got an advertising model or a model where you're selling to individuals, the consumers, they have to want it or need it. So is there a want or a need? Now, what's interesting about crypto is that you'll see a lot of people talk about, nothing wrong with this, but they'll talk about the hype around a project. And sometimes they talk about the hype around a project because the project isn't really fully functional yet. They've just started the roadmap. Maybe they're not even generating fees and revenue. So, and there's nothing wrong with that, but they're more at the beginning stages of what they're trying to execute. But you can look at some of these projects, compare them apples to apples, and look at the fees and revenue that they're generating to see if people are willing to pay for this. Are people actually using the platform? And in that case, because what I saw recently with this downturn, the market's consolidating, things have gotten cheaper over the last couple of days, significantly cheaper. I've been buying in, dollar cost averaging into a bunch of projects. But what I noticed about a lot of the coins that I invest in is that for those that really don't have a lot of fees or revenue yet, they took a big hit. Let's say 30% or 40% or 50% drop. But for those that have fees, have revenue, and further along, they didn't really take as big of a hit. For example, ANDO's one that I've talked about in the past that has tokenized Treasuries. And it's a working model right now. You can buy and sell Treasuries 24/7 with tokens. Okay, great. That's an operational business. It didn't take much of a hit. I'm not even sure it took any of a hit. It may even have gone up a little bit. Anyway, let's jump into DeFi Lama and let me just show you here. And I'm going to cheat because I'm going to get some more specific information from ChatGPT. But let's talk about layer one. Think of layer one as the super highway and layer two as a smaller highway off to the side. So you can take things off of layer one onto layer two. And they do that because if layer one has its fees for the transactions processed on it, and then layer twos typically will do things like bundle up a bunch of transactions so that they can lower the cost, and then together they do perform one transaction on the layer one. Okay, so here we are at Ethereum, and I've got the market cap on, but take a look at this. They've got fees and they've got revenue. So let's take off the market cap for a moment. Let's look at fees and let's look at revenue. They overlap quite a bit, and you can see where they were during the last run and today. Now, what's interesting is I always like to look at the market cap to see if the market seems to be pricing it properly. The market cap has gone up quite a bit, even though fees and revenue haven't jumped quite as much. Doesn't mean they're not going to. But let's take the market cap off. We look at fees and revenue. Over here, you can see on any given day. On this day, fees were 70 million, revenue was 62 million. Revenue and fees can be quite different depending upon how they're recognizing revenue. And then so you can look at it on a daily basis. If you scroll down here, you'll see some of the larger projects that are built on top of Ethereum. Lido is one. Lido, I'm not sure, but that's staking and earning rewards. And then here's a big one, AAVE. We'll look at both of these, which is lending. So let's take a look at in particular, AAVE. So we come to AAVE, and I've already clicked on fees and revenue. But on any given day, the fees for example, for here, fees were 2 million and revenue was 200,000. All right, so let's dive into revenue. As I said, I was going to cheat here. This is ChatGPT. Layer 1 fees in the context of cryptocurrencies refer to the transaction fees incurred on the base layer of a blockchain network. So on the Ethereum network, these are the fees to perform a transaction on the Ethereum network. This is where the actual transactions are processed and recorded. All right, gives an example. Bitcoin fees are determined by the data size of the transaction, the network congestion. Ethereum uses a gas system where fees are determined by the complexity of the actions and the congestion of the network. If you've ever performed something on the Ethereum network, usually you'll see like a little gas meter, and during different times of day, depending upon your time zone, they'll be up or down based on the congestion of the network. So the layer 1 solutions focus primarily on improving the base protocol itself to scale the entire network and manage fees effectively. All right. Then that says contrast that with layer 2 solutions that build on top of the existing layer to enhance scalability and reduce fees. Layer 2 fees in cryptocurrency refer to transaction fees incurred on secondary frameworks, that other highway, as I was mentioning. The purpose is to offload the transaction burden from the main blockchain to a secondary layer, to take some of that congestion off of that Ethereum network and move it on to a layer 2. This helps in scaling the network by handling more transactions. And they give an example here of optimistic and ZK rollups of how transactions are performed in batches off-chain. That's what I was mentioning. So they perform them off-chain on their layer 2, and then they settle it as a single transaction on the Ethereum network. Okay, great. Now let's talk about, that's layer 1 and layer 2. That's really the foundation of everything. Now let's talk about some other things that are built on top. In particular, the AAVE platform that we took a look at here, where we can see the fees of, let's say, 2 million on a given day and revenue of 200,000. The AAVE platform essentially is, I can go on and I can lock up my tokens and earn an interest rate back, because they're going to turn around and let others borrow those tokens. Like myself, I could go borrow tokens, and then I could obviously pay the interest on that and get a loan. Fees and revenue recognition. They broke it out here. Fees, borrowing, flash loan, withdrawal fees, revenue recognition, interest from loans, and protocol earnings. Now, if you don't know, this is what makes DeFi so interesting. The distribution of fees and revenue. Okay, what do they do with that, right? What does a corporation do with it? Well, a corporation exists for the benefit of its shareholders. What does this do? It doesn't really have shareholders, so to speak. Liquidity providers. The majority of fees and interest collected are distributed back to the liquidity providers. That incentivizes users to deposit their assets into the AAVE pool. You deposit your assets, you get a rate of return, or you're creating pairs and liquidity. Now, the portion of it goes to the AAVE Treasury. Think of it as the company, specifically from flash loans, may be allocated to the AAVE Treasury, which is generated by the AAVE token, governed by the AAVE token holders. These funds can be used for development, grants, and other activities that benefit the ecosystem. So to build and maintain that infrastructure. It says revenue and fees in AAVE are governed by the decentralized community of the AAVE token holders. They have the power to propose and vote on changes to fee structures, interest rates, and the use of treasury funds. All right, so there you go. Essentially, it says the distinction between revenue and fees in AAVE's context is less about corporate profit and more about maintaining a healthy, self-sustaining financial ecosystem. Decentralized finance. Fascinating. So now we know how layer 1 generates its revenue for the transactions and layer 2, and then for the apps that are created on top, like in this particular case, the AAVE, they're generating their fees and their revenue from the services that they're providing. And then we can overlay market cap. Let's take a look. Now, interesting, right? Look at the disparity between fees and revenue and market cap. Market cap back here in middle of 21 was substantially high as it ran up. Fees and revenue were at their highest at that point in time. But as we moved on, fees and revenue were much higher. Market cap had come down by 50%. Fees and revenue went up by 50%. And over time, they've gone down, but now things are starting to ramp back up. So if you want to take a look at, hey, how is this particular coin or this particular app doing currently with respect to the market cap and fees? Look at the fees here. What do we got? Fees and revenue of 1 million fees and a market cap of 1.8 billion. Back here, we've got fees of, let's hit around 1 million. Here we go, a market cap of 3 billion. So it's interesting to see that we've got half the market cap at the same amount of fees at a given point in time. Okay, then you can, of course, look at other Layers like Solana, same thing, hit their fees and their revenue. They are almost half the revenue, fees of $1 million, revenue of 500. And then let's overlap the market cap here. If we go back to the last bull run, fees of 300,000, market cap of 75 billion. Again, this was back in a time where it was just getting started or ramping up here. But look at it today or recently. Back here, we're looking at fees of 3 million, revenue of 1.3, market cap of 83 billion. Big difference between back here when you had 200,000 and a market cap of 80 billion. Now you got a market cap of 80 billion and you have 2 million in fees. That's 10 times the amount of fees and revenue with the same market cap. That's Solana. I find that fascinating. So if you look at how they were valuing it back then versus how they're valuing it now. Now, a lot of times people will say, whether it's stock or crypto, the price you're paying today is based on what you believe the future performance to be. So maybe they were valuing it back here on what they thought would happen in the future. But look how during this bear market, things just went to nothing. And now things are really taking off. So to me, this is interesting when it comes to the current market cap, the current pricing, and then the amount of fees and revenue they're generating are substantial. If you were to compare that market cap, fees, and revenue, let's look at Ethereum market cap and their fees and the revenue. Last time, substantially more in terms of fees and revenue than we've got here. Anyway, that's what I wanted to point out. And also on the Ethereum platform here, if you want to look at one like Lido, you can go in there and look at their fees and their revenue as well and see how it's ramping up, because that's also on the Ethereum network. But there you go. Today I just wanted to look at what I consider to be an incredibly important metric, because I want to know how's the market valuing some of these coins with respect to fees and revenue. I believe that when things do go down or correct, sometimes, and this is never financial advice, but I've happened to notice that there's usually less of a correction for those things that have a strong operating business model where they're generating substantial fees and revenue because they've got some underlying value there. Thanks for watching. Let's make generational wealth together with crypto. Please subscribe, smash that like button. It helps me grow the channel. Have a great day.